and investing in equity, the counterparty is also maybe selling some stock.
Again, technology can't buy loyalty.
डिपॉजिट सही है, पहले भी सही था, अभी भी सही है, फ्यूचर भी सही होगा.
Somebody wants higher interest rates, they can shift to term deposit, but ultimately deposits will come.
Where there is a proper asset liability management also, and where the risk is also not very high.
Very good afternoon and welcome back. This is a private bankers session, and you must see in the profile how they are being chosen to represent the industry. We have one entrepreneur, Vidyanathan, at the extreme left, and rest all the three are in some sense turnaround artists. Subramanian Kumar of RBL, big boss in the IDBI Bank, and Prashant Kumar in Yes Bank. The past few years, all three banks had faced difficulties, had troubled times, and all three of them have been rescued. I mean, I call them turnaround artists or whoever you are. So it's a very, very interesting panel, and subject is also pretty interesting. Everybody is close to your heart, because I'm sure most of you, you must be investing in stock market, but bank deposits traditionally play a very critical role in our financial savings. And this, for the first time, at least in this century, bankers are finding difficulty to mobilize deposits. So subject is bank deposit sahi hai. It's a takeoff from mutual funds sahi hai. That's the way mutual fund has grown many folds. It's now, I think, 68 trillion. So focus is on the liability side. State Bank of India can afford to pay only 2.75% to attract savings bank, and SBI chairman was there. He was changing, no, is all savings bank meant to be transactions, so why should we pay? I mean, it's the way India is now. At least State Bank of India is saying it's just like the developed markets. We don't need to pay. It's as good as saving current deposits. Almost virtually, we don't need to pay anymore and all. State Bank of India can say that because it's a government-owned bank, and public sector banks, all of them have that backup. And they have also branch network, so big, much wider branch network. You guys are a little inconvenienced in that sense, even though no bank has ever failed, at least in the post-liberalization, no scheduled commercial bank. We're not talking about the cooperative banks, that there have been some failure, but as far as when it comes to the mainstream banking segment, not a bank has failed. But still, government-owned banks carries a different kind of feelings for the depositors, which you don't have. They have much wider branch network. You probably have better technology in some cases, but again, technology can't buy loyalty. So you're a little more inconvenienced than them. How serious is this issue? Is this, Rakesh, we'll start with you, because you are a public sector banker turned now, you have turned around a private bank doing so well, and you have pretty high CASA ratio. Even that CASA is current and savings bank, right? Even though you have pretty high even now, but still there's a substantial drop from the much higher level 2 years back. So is it a real issue there, that raising liability?
Yeah, first of all, as you were mentioning the high ratio, in fact, we started somewhere from 33% in 2019, reached 53% in last year, and now, of course, it has come down, as it is coming down in all the banks. It is around 48%. So that's one thing apart. But yes, first thing is deposits. Basically, we have to see the saving habits of the people also. So earlier in 2011-12, when the saving rate was quite high, it was more around 38-39%. Now it has come down to 28-29%. So the consumption is increasing. So savings are somehow coming down. Then second issue is that the various opportunities are available. Now, of course, the bank deposits as such have its own strong points. What do you need in deposits? If you have to keep, liquidity should be there, risk should be less, and then it should be remunerative. So all these three facilities are available with the banks. But yes, certain, to some extent, the deposit rates means, the persons, they can get more remunerative like mutual funds and other issues. So that is why they divert. So, but you have to somehow assess their own risk-taking capacity and keep a certain part there, certain part there. So, but best I still feel is the bank deposit. Now, the issue now which you have said, of course, because of the low saving rate, yes, deposits are coming down. It's a challenge. But at the same time, ultimately the bankers will have to, all of us will have to come out with some new products. Digital banking, now this, the originally, earlier we used to say only BCPF should be there. But again, there is a concept that unless physical touch is there, so that's why banks are opening physical branches also. So it is phygital now. So physical branches, phygital analyzing and, contacting more customers. Still, of course, interest rates are going up. So in this, although it is to some extent affecting the profitability of the banks also, but ultimately it is our raw material. So ultimately we have to raise deposits. So, but I still feel that, this trend, although there may be small reduction will be there, but it is not a very big challenge to take deposits. Deposits will come, only we have to come out with some innovative schemes, some innovative methods of raising deposits, and otherwise if deposits we are not able to raise, we will not be able to lend also. So that will affect the economy. So deposits will come in maybe slightly lower form and will be continue to raise.
Mr. Vaidyanathan, or shall I call you Vaidya? What is your take, preliminary remarks? Then we'll get into the micro issues.
See, preliminary remarks. Now, the use case of savings account is so different than investments and mutual funds. So I think we should not mix the two. Both are required. Typically, people leave 3 to 6 months money of day-to-day transactional activity in savings account. Beyond that, you actually advise them to invest in an equity fund, no problem, because traditionally it has given higher returns. So use case is different. For example, what do you use savings account for? You're going to pay EMI. Can you pay EMI from mutual fund? You won't do that because there are exit load costs. Can you pay a daily transaction account from mutual fund? You can't do that. Can you do UPI transaction on mutual fund? You can't do that. So there are just so many use cases of a savings account that's different than mutual fund. They have completely different purposes. Both are necessary for a system. Both are necessary for the economy. Both are necessary for individuals. And they have the respective places. Now, therefore, the way to look at this, in my opinion, is not so much that mutual fund is pulling away money from banks, etc. Because we should also remember that if a customer is debiting a bank account and investing in equity, the counterparty is also maybe selling some stock, and that money is coming back to the banking system. So only color of money is changing from a retail deposit to a corporate deposit to an extent. In fact, the extent of household deposits as a percentage of total deposits in India used to be 64% 4 years ago. Today, 61%, meaning money is changing hands from retail to wholesale. But other than that, I don't see this as a fundamental issue because money is still staying in the combined pool of banking deposits.
Mr. Kumar?
Thank you, Tamal. If you just ask me the fundamental question, is it mobilization of the deposit, is it difficult? The first question of mine is no. Whether it has been made out as a big issue, I will not say that whether it is made out as an issue or not. The one thing which all of us need to understand is that the deposit is no longer confined to that realms of a decade before. The composition has changed is what I would like to say. If you look at some of the private sector banks which you are looking at, the CASA or the SAR rate and the TD rate is little blurred. You look at the upper stream of the SAR is seeing the lower stream of the TD, right? So that means the people have changed their habit of putting the money in the bank from what it used to be a transactional money, which I will call it as a money in motion. See, what I wanted to do, I just wanted to pull the money for my grocery, money for my household expenses. I wanted to pull it. I put that much of money there. The surplus previously used to move into that fixed deposit. Now the surplus is moving to the alternative asset, which wasn't there earlier. Has it removed the cash from the system? No. If what the deposit, what you're talking about is, then the cash which is there in the kitchen of my wife or my mother, that should have vanished. That should have gone elsewhere. It is still there. Whether are you in a position to mobilize that piece of the cash into that banking system or alternative asset system is the difference. Today, when the alternative asset investment opportunities are available, nothing but natural, there will be a small sine curve. There will always be a movement in the initial flurry of movement will always be there, which will make you to feel that whether it is coming from the alternative system. As Vaidhi said very clearly, see, ultimately everything has to be the banking system. There are 2 points. One, money in motion. Again, it has to be a part of your banking system. And the money in bank, that's what we are talking about it today. Should it be driven by simply mobilizing it, or should be defined by where I want it to deploy? I would rather prefer to say that if I have an avenue for deployment, if I have an opportunity for deployment, and depending on what sort of opportunity I have to mobilize appropriately. High risk deployment, if I have to do, I need to have a stable deposit which is going to sustain me the cycles. If it is a short-term deployment which I have to do it, I have to look at the CASA. So all your strategy as a bank, depending on which direction of your investment is going to take place, either you go for the deposit or you go for that borrowings. So the combination is available to the bank today, which wasn't there to that extent earlier. And the market is also coming out. See, the money in circulation is moved up from what it was earlier. So it has not disproportionately cut the deposit. It has just proportionately moved out. So in my view, if you ask that deposit sahi hai, pehle bhi sahi tha, abhi bhi sahi hai, future bhi sahi hoga. I don't think that there is alternative one. Sab samay sahi hai.
Thank you, Prashant sir.
But this is Tamal's way of framing a question to, get you, Subramaniam, fully all worked up. So well done. Okay.
Sir.
Tamal, what?
I think the issue about the deposit which we are talking about.
So all this talk about high credit deposit ratio and you need to rein in your credit because your deposits will not be able to support, and all these are all hawa mein ho raha hai, kuch actually there's nothing, everything is fine.
No, so what I am saying, we need to see from a perspective. The first part, like what we were talking about before lunch, okay? I think it is very, very clear that the deposits were coming into public sector banks on its own. And private sector banks, right from the beginning, they were fully aware that for their existence, for their survival, they need to mobilize deposits, and they were reaching out to the customers for deposit. This is the fundamental thing. Okay? Second thing, over a period of time, there has been a huge improvement in the efficiency of the system, both on the government side as well as on the corporate side. So lot of money which was sitting in the system because of the inefficiencies are not available. Okay? But definitely from the private sector banks, this is the part of their muscle memory, that is a part of their DNA to reach out to the customer to get the deposits. Only thing would be now, since there has been an efficiency in the system, money is moving from the banking to the other asset class, though this is also one viewpoint that fundamentally money is coming back to the bank. But I think we need to make a distinction. Why we are taking deposit? We are taking deposit to lend money. If we are getting deposit from the financial institution, which is either LCR negative or there is a higher outflow of those deposits, it means you don't have the lendable deposits available. So fundamentally, to mobilize the lendable deposits, it is becoming tougher. Issue is more in terms of how you are going to do it, whether by offering higher pricing. Our experience is, if you are able to take care of the customer and also the convenience to customer, you would be able to mobilize deposits. We as a bank, we came into the problem in 2020. We started with 1,05,000 crores. Today we are 2,70,000 crores in 4 years. We are seeing a continuous deposit growth of more than 20%. CASA growth is actually upward of 20%. So we are seeing a improvement in the CASA ratio over a period of time. And our CASA growth is almost like 26, 28% for the continuous last 2 years.
So it's not the, am I getting you correctly that you are saying it's not the deposit rates, it's not 25 or 50 basis point that works, is actually how you care for customer. Is that the thing?
Absolutely.
Is it new realization or it's always
No,
like that?
it's always there. It's always there. It's only in terms of if it is coming to you, like when I was in SBI, we were never thinking of deposit because deposit was simply flowing at 2.7%, 2.75%, whatever. I am saying in a private sector, if you want to get a deposit by just offering a higher rate as compared to providing a convenience and the care to customer, these are two separate things.
Okay, let's say here, Vaidya, because 2 years back you are offering 7% on savings bank, if I'm not mistaken. Now you are actually coming down. So, and that higher deposit rates helped you to gather deposits, right?
Not 2 years ago, 2019 when we started, 18-19. But we quickly realized that it is not interest rate that is making a big difference. So we brought down, we were paying 7%, but within 1 or 2 years we brought it down to 5%, then deposits still coming to us. Then we brought down 4%, deposits still coming to us. Last year we brought down to 6 months ago, brought down 3%, still deposit going 30% in IDFC Bank, just for information, 30%. Now, so our deposits, we started with, retail deposits started with some 10,000 crores in 2019. Today it is 1,60,000 crores, growing at 30% per annum. So, this is after dropping rates. So now, we have now realized that it is not the, even when people say that, mutual funds are paying high, getting better returns, you should increase interest rates. Historical returns in equity mutual funds in the country has been between 13 to 15% compounded over 30 years. If banking system pays 6 or 7, one person not going to catch up with 15. So therefore, interest rates is not the solution. We understand that the use case is different. I mentioned that to you, at least 3-4 months of monthly expenses, people keep in savings accounts. So the solution is service. So we have gone crazy about service and about the technology. We are finding that not just giving customers the bank balance, giving statement of account, that is also 1990s, or even giving a mobile app is so outdated concept. But to give continuous solutions, investment solutions, financial planning solutions, customer service, video banking. Nowadays, where to some customers we are not permitting, you press the button on the app and live, somebody comes up on the other side and talks to you. Customers find it a very big service. Now, customers need to know, even among mutual funds, though you see it as a competitor, I believe it's part of evolution. I'm not so disturbed about that. But just to tell you that India has over 2,000, 3,000 mutual funds. Which mutual fund customers to invest in? So that's also service you offer. So when you offer service, you offer financial planning tools, you offer all these things, then customer becomes sticky with you. I agree. First of all, I'm not denying that generally deposits in the country has an issue because in the sense it's growing only at 10, 12%. If you grow deposit by 10 and then, it's an issue. It's a cyclical issue. It will go away. But service, according to me, brand, institution, recognize and what the brand stands for, these are all very material factors.
Let's hear Mr. Kumar and Sharma, like is it the service, customer care service versus interest rates? What actually the hook for getting more deposits?
I have a slightly different take on this. There is always a base level deposit and above the base level deposit. The base level deposit is what all my colleague, the fellow panelists talked about. It's on service, on usability, it's on the free, it's on the ease of doing a transaction which is going to meet my activities, be it an investment, be it a mutual fund, whatever it is. That's a base level, I call it. That base level may vary from customer to customer, the group to group, cohorts to cohorts, and banks to bank. Up to that, definitely the interest cannot be a differentiator. The major differentiator could be that how you offer, how your delivery of that particular service is going to be the differentiator. Be it on digital, be it in a branch, be it on any other channel, what you're talking about, and the ease of doing that particular transaction will decide the base level. If my base is, let us assume that 5 lakhs, possibly the segment of the customer whom we are looking at is slightly different. Up to that base level, interest is not a impactful variant. But beyond the base level, if you wanted to have an average balance, naturally the differentiation has to come in the form of an interest. Interest has a bearing there. Why would I like to park certain amount of, let us say, a couple of crores in savings or TD account when I have an alternative opportunity for putting the 2 crores where the returns are better? Two, if you wanted to attract that segment, you need not be a replaceable interest rate, but it should be closer to that interest rate what you have. So the service and differentiation at the lower level and a higher level, of course, that is given. That's a basic hygiene. Today, beyond the base, also the service level is a basic hygiene. Without that, you can't attract. If you have to attract, naturally, some of the banks. You can't give an example of SBI, but I can say that if SBI is definitely good in savings fund account, for TD, they have been consistently increasing the rate of interest. I recall exactly a couple of years, I can recall the differentiation between the peak rate offered by my bank and that of the largest banks in the country was 140 bips. Today it is 40 bips.
You're talking about FD rates.
FD, I'm talking about deposit. When we are talking about the whole state.
Yes,
so the people always push the amount beyond the base level into FD only. There, when they push beyond the FD level, either your savings should be able to offer closer to that high stream. I was just telling about high segment, a high end of the savings also offer closer to that FD. And if you wanted to have a long term, because mostly today, when so many alternative opportunities for investment is available, people would like to lock lesser amount in FD if they have an opportunity or they're waiting for an opportunity to knock. So you have to have a flexibility of the moment. Wherever you have a flexibility, this I will not call as a product differentiation, or rather it is a feature differentiation. Can I close my FD and then pull the amount without losing the money? That's one particular feature. So that is what the differentiator is.
We'll come to the products and innovations part, but Sharma ji, aap boliye.
Yeah, frankly, I will also agree with my friends, but I'll put it this way.
Agreeing meaning the service
Customer service is more important.
matters
but,
more. Huh?
But I will like to put up in a different way, in the sense that that every depositor wants minimum interest rates. That is why they are keeping it. It's not like a zero interest like Japan or something like this. So our customers also wants deposit interest. Ultimately they have to earn the income. So that is why this I also remember, as Mr. Vedyanathan was telling. So in 2019 we were also struggling because we had high, slightly, not like 7%, but 4% of this thing rate on saving bank deposits. So we were telling our staff members to reduce the interest rates, but they were quite reluctant. We said, no, let us reduce it and there will not be any effect on the deposits. And it exactly happened like this. Now the second is of course, the depositors will like to earn interest. So there are various schemes are there. Term deposits are there, fixed deposits are there. There are various durations also there. Lot of schemes are available. So, if somebody wants higher interest rates, they can certainly go in for the term deposits and all these things. If they want more liquidity and just for day-to-day, saving bank interest is there. But more important is customer service. Like these days, digital banking, mobile banking, our internet banking, how these are synchronized. Mobile banking, our digital, that internet banking, and what type of facilities and the customer convenience they are having. So that is more important. So otherwise, they can go for term deposits and all these things. But one thing I will also like to say, while the CASA ratio is coming down, but note that the total deposits are coming down. Deposit growth is there. Maybe some portion from CASA it is going to term deposits. So that exactly what I wanted to say, that if somebody wants higher interest rates, they can shift to term deposit. But ultimately deposits will come.
See, if you look at State Bank of
and
India.
Customer service is more important.
If you look at State Bank of India, okay, now for 200 years, they have invested in the brand, trust, reaching corner to corner of the country, opening those accounts, KYC, etc. They have the relationship. Now, what is wrong? If they pay 2.7, they pay 2.7 because they've earned the right to pay 2.7. Nothing wrong about that. Some multinational banks are giving 2%. Why are people keeping money there? Because it is a combination that they have earned the right to pay 2%. In this case, 2.7%. So I don't think that entities who are paying lesser interest are being lesser customer friendly or anything like that. And it's not that somebody is paying more interest is more customer friendly. This is not a measure of customer friendliness. It is just what they believe that their need is, and what the composite of their experience will pay for.
Well, just one talking about customer service, which is even Reserve Bank of India's on the drawing board, because governor was repeating that, going beyond banking regulation, supervision and all, customer service also Reserve Bank of India cares for. Now, till recently what was happening that if I'm a bank customer, if I would dread to get into a bank branch because I'll be hauled, just whatever, how much money, how can you keep so much of money, there's a mutual fund, you put it there and all. And particularly private sector banks, even public sector banks were doing that. So essentially you wanted to have a free income, that's how. Is that been changed now? You think that interest income is more important than fee income? And have you you telling your guys that please stop hounding customers and stop selling mutual fund and get the bank deposits? Is that the way it's happening?
It's a very, very, very good question. Here again, we should not think we should think what is good for the customer. We always tell customer ki yaar, after you keep so much of savings account balance, you should invest in mutual fund. That will give you a better return. Of course, banks makes a fee. Typically about 80 basis points bank makes on mutual fund. But that is fine. But for the customer's point of view, it is good for the customer. It is when we say service, that is beyond, to your point, is beyond regulation. For example, we go crazy about the concept of service. I'll give you one example. In contact center, world over, typically the benchmark of picking up calls, if you made a call, pick it up, is three rings or 20 seconds. Everybody in banking system will know. In our bank, we're tracking also to 1 second. 1 second. We say within 1 second call should be picked up. How many percentage we pick up? 90, 95, whatever percentage. So it is a changing the standard of service. Then providing, we do something called, basically we say that, first of all, every design should be made in such a way customer should not have a service problem. If they have a service problem, they should come to the mobile app, not the contact center. If they, for some reason, therefore give all service mobile app. If you can't come to mobile app, then at least I want to service you on the call center. Don't come to the branch, don't have to come to the branch. Then if you can't solve the branch, we have put a tiered structure like this because we figured out what is least expensive. Mobile is less expensive, call center is more expensive, branch is more expensive, and so on. So therefore, and finally is the design. So my point therefore is that service is, we discussed this before, but we tell our people to just, if customer has made some mistake, right, and said, I shared password with someone, I made a mistake, I lost 1,000 rupees. We can legally say, fine, it's not my fault, you made a mistake. But we tell our people to take care, just give the customer refund. So service is like small examples, but we make an effort for service.
Kumar, have you told your branch managers that stop asking for putting money in mutual funds and ask for the deposits? Or
no,
has it been changed that from fee income to interest income you're shifting because interest income is at stake now?
See, I'll tell you, when you are working on a segment customers whom we are focusing as a bank, the first service is to make it what is good for the customer. If I wanted to talk my people who are to have an advisory, so why somebody wanted to come and then have a relationship with some relationship manager? They are not able to understand all the small letters. They are not able to understand to choose out of thousands and thousands of schemes and funds available across. But they have a trust on somebody. When somebody is having a trust, there are two ways it can be. Trust can be misused and they will be able to force and then give them, instead of FD, put it in insurance for their own revenue earnings, which has been told very clearly there is no mis-selling, which I wanted to call it as a mis-selling. The question of mis-selling is not a part of it. There's zero tolerance as far as the banking is concerned, as far as our bank is concerned. If it is going to drive somebody for that mis-selling, it is not in the interest of the customer, it's something which has to be ingrained. So it doesn't mean that you have to tell them that you don't have the fee income also. It should be a combination. If the customer says that I'm having 1 crore with me, you tell me a combination where I should do. In fact, my customer relationship manager even tells, gold is also another option for you to invest, have it this percentage of it. Because it's not going to get them either a fee or not an interest. It's going to outgo. But it is going to get that, the Fevicoil, the Pedalite stickiness with that customer. The Fevicol customer is going to be the one which is possible. You may lose a couple of crores in that particular deal, but you are not going to lose a customer. So that is the entire turn.
So Sharma sir, both Vaidya and Kumar says that no, it's not the bank's profitability, it's the customers what is good for them. So bank don't care about their own profitability, their own income. It's for the customers they exist. What a wonderful.
No,
sir,
no, it is. No, Tamal, I think you're being suspicious about this.
no.
I'll tell you.
No, I'm not
it-
suspicious.
No, no, it is. It is because really.
Everybody is hearing that.
No,
so
no, of
it's
course.
good,
No, no,
good.
because you see, if it's like a, you go have a thali, you also have some sweet, you also have some dal, you have some roti, you have some rice, you have some papad. Like that, you need some mutual fund, you need some savings account, you need some fixed deposit, you need some investment, you need the whole combination. And therefore, we should not look at mutual fund ki ye bada competitor hai. It's not like that. It is a combination, and we encourage the combination because everything makes it sticky. If we try to tell a customer, don't go to mutual fund because my money is to be saved, just to be clear to you, you think the customer is going to say, okay, I don't want to invest. We'll find some other ways of investing.
Rakesh sir, so thali bole.
I'd like to give you
Thali?
some real life example.
Thali, haan, boliye.
A real life example.
Boliye.
If I go to a medical store, it happened with me. I think would have happened with all everybody here. So if some 5-6 medicines are written, and out of that, if somebody says that I only 2 medicines I can give it to you, remaining 3 you go to some other store. So what I used to do is no, theek hai, 2 with rehne dijiye aap. I will take all where all these 5 are available. So this is how the bankers are trying to provide all the facilities at one place. This is cross-selling basically. It is not that, of course, income is there, not that, we are doing it free. So income is also swelling, that is also the part. But suppose if I am not offering all these facilities in my bank, then they will say, no, I will go to some other bank who is offering all these facilities. So that is why this mutual funds or these things. So again, as I said in my opening preliminary remark, that the the depositor, they have to spread their money to earn the maximum rate of interest. So that all these products are available to them. Now they have to decide. Only what we have to ensure is that there should not be any mis-selling. Personally, in fact, whenever I am addressing my staff members, I always insist that, you have to do this cross-selling, but please remember.
Cross-selling but no mis-selling.
No mis-selling.
Kumar sir, you want to add something?
The income, of course, is there. Not that income is not there.
Cross-selling, no mis-selling. Sir,
But
any
more
want to add?
important is customer convenience.
Vaidya is offering thali. He's saying no cross-selling, no mis-selling. You want to add anything? to
My
that?
answer would not be different from what is being explained by my colleagues.
Okay.
I think it's very, very simple. It cannot be either or.
Okay.
It has to be like bank as a financial services product. You have to advise, you have to offer all kind of product to your customer. And like what they are rightly saying, if you don't do it, and if a customer want to invest in mutual fund, he will get it done from somewhere else.
But do you any of you think that, and you want to reiterate that it's the government is being unfair in the sense the tax advantage the mutual fund enjoys? Because if I am keeping money in bank deposits, I am subject to the tax, whichever the slab I belong to. And even before the realization of FD, my tax is paid because whatever the earning which is with you. While in the case of mutual fund, there are multiple ways of, 1 year, beyond 1 year, I pay much less tax, etc., etc. So you think is the time that government should relook at the imbalance when it comes to taxes between mutual funds and banks?
If you ask the raw answer for that, everybody will say yes to it because it is going to benefit somebody. But if you take a deeper look at it, that is not the differentiator today. When the asset allocation understanding is clear in the mind of the investor or the customers, they also know there is something complication called your capital gain tax and stuff like that. They know pretty well the one who is going to invest it. When we are talking about a small-time customers, investors, they are not in a position to differentiate this. They say that, okay, FD is a good one. I'm able to see. I have a trust. I have a flexibility. I have security. I'm able to pull it. It is as good as a cash. Understanding the other side of that, despite having all these tax benefits, understanding is going to be a problem. If other than the mis-selling, if the relationship manager is able to give it to me, I'll be able to adapt it. That is the majority of the people doing it. I don't think that the tax can be one of the differentiator, and I don't think that we will be pitching it as a bank, if you ask me personally, because that differentiation is not seen from both the sides of the table. I don't see that as a deterrent for us to get the deposit. I don't see that as a deterrent for them to put the deposit.
Okay. Now, I just want to ask you that, do you see any structural change in the way in banking is done? So I'm not, as the savers are becoming investors. That's what everybody is talking about that. No? Whether what you are talking about, I'm not getting into all this M3, the money multiplier and money supply segment and all, because yes, money is coming to you in a different format. Instead of having savings bank, you are having CD, but you need to pay more, and there are a lot of other restrictions. But do you see there is a structural change here? The corporations, the borrowers need to depend more on markets than the banking system. Are we heading towards the situation? And also at the same time, for instance, when your liabilities are concerned, Reserve Bank of India, like your tier 2 bond is subject to SLR and CRR, right? Even though it's a tier 2, it's a part of the capital. So do you think RBI should take a relook at this, that tier 2 should be exempted from the reserve requirements from your liability side, on the left side of the balance sheet, and on the right side, on your assets, etc., you think that corporate India should turn to the markets like any other developed market more than to the banks because your liability is under strain?
Well, it is indeed true that in due course, large corporates who have ability to borrow from the market will move to markets, should move to markets. Because if end of the day, let's remember that the sum total of credit that's available, if historically, at least until 10, 12 years ago, all this money was given away to large corporates and small people never got credit. Okay. Now, the larger corporates have bigger balance sheet, they have a credit rating, they should go and raise money from the markets, from bonds and everything. And if you leave that money open, and then that money can reach these small entrepreneurs, micro entrepreneurs for productivity financing, skill financing, business financing, SHG financing or wash financing, all these kind of real or productivity financing, all of this financing money, I agree with that line of thought that people should move to markets.
Kumar, do you see that structural change is happening?
No, I think that is bound to happen. If you see, there has already been a regulation which talks of the large corporates moving to the bond market.
Yes.
Okay. And now if the money would be sitting with the mutual funds, pension funds and other financial institutions, I think they are definitely going to invest in the bond market. But there would be a shift where the banks have to take care of their asset liability management and would lend to only those customers where there is a proper asset liability management also and where the risk is also not very high. So I think all kind of very large projects or very large corporates, their funding requirement would come from other than banks.
Anyone want to add?
Yeah, also like now we are talking of Viksit Bharat and all. So Viksit Bharat mein then all our capital market and the money market all have to be developed. So as we know that in our country, bond market is not so developed, and that is why there are issues about this trading of bonds and all these things. So if we have to go towards, we are of course going towards Viksit Bharat. So all this money market and capital market all has to be fully developed. So bond market, so some changes will be there. Now of course that you were touching about SLR, CRR. Of course that high liquid funds and all these things what RBI talks about. So because the regulator is concerned about the the liquidity of the banks and the responsibility towards the depositors. So that is why all these ratios are there. But certainly, yes, going with the time, the percentage wise some tweaking can be made. Like SLR and CRR also. So now all the banks are quite strong. And the liquidity is the LCR and all these things, the way these have been planned, it's liquidity position with the banks is quite comfortable. So I think they can consider
and let me add to you, Tamal.
Percentage change at least, not the full. But
see, we're talking of say Viksit Bharat, right? Now, America is a developed country. We all agree. They also, at one point of time, would have had per capita income like us, $3,000. Today, they have become $80,000. So now, as they become more Viksit, so to say, in the developed country, now close to 52% of US households have investment in some sort of mutual fund. तो अपना देश क्यों अलग है? अपना देश भी ऐसे ही जाएगा. Right. So therefore, it is true that banking, because after meeting their saving requirement or fixed deposit requirement, surplus money will go there. It's okay, because that's okay, not to be disturbed about also. The key thing to note is that it's a cycle. It's a cycle. So as the next 8 or 10 years, forget 8 or 10 years, even 2, 3 years play out. See, if you take the growth of Indian deposits, I'll tell you one data which will give you a good color. In 2010, which is not very far ago, Indian deposits was 45 lakh crores. Okay? In 2020, it was 160 lakh crores, 4x or 3.5x. Today it is 230 lakh crores, right? So deposit is also growing to that extent, and with with greater formalization of the Indian economy, where cash is coming to the bank, right? That also will feed to it. Indian economy is growing, more dollars will come into the country, that RBI will convert to rupees and put it in. So itna tension ka baat nahi hai, but it is a larger ecosystem issue that is, to your point, structural changes are happening in the economy, which we should be participative of.
Yeah, we'll come to quickly that what are the kind of innovations you are seeing on the liability side. But before that, Sharma ji, there's a entire financial sector here, very literate audience. Would you like to share something on the IDBI privatization? I mean, everybody's asking. It's completely unrelated. I mean, you have choose not to talk also. It's more than it's about 2 years now we are hearing that. So what's happening, sir? Anything want to share? I mean, in case you want to share.
My stand, of course, I think this question you are asking me for the last 4-5 years. And
4-5 years? Okay.
Most of the time my answer was that, I am responsible to my stakeholders, my investors and my depositor and all these things. My, the
Rakesh, don't answer the question. Don't try.
To see the
Rakesh,
performance of the bank.
छोड़ दे.
So, yeah, आपका Deepam जो है, so that I think Deepam is the right department to ask this question.
Okay.
I'll just tell one thing about it.
हाँ जी.
Whether it is privatized or otherwise, deposit तो सही है.
हाँ जी. Deposit will come to that. Ajay sir, quickly, because since it's a bank deposit, so on the liability side, on the left hand side of your balance sheet you're discussing, we are not talking about the stress and other things and all. But tell us that what are the innovations? Because on the deposit sides, we don't have, up to 5 lakh you get this percent, and then beyond 5 lakh you get this percent, this percent. That's the one kind of thing that's already happened. Reserve Bank of India does not allow you to discriminate in geographies, that in Bombay I will pay more and Kolkata less, nothing like that. External benchmark linked deposits never took off. So what are the innovations that can be done?
See, one of the major reasons for adoption of the deposit is a simple product. This is something for years together, go from bank to bank or branch to branch, it is going to be the same way, same product. That is the reason it is getting adapted.
Right.
So the product per se cannot be innovated. Product per se has to be offered as it is today. But the variants
except
of
for
the features,
except for sweep in, sweep out, that's what you have done. Other things are, which is after certain, if it crosses the ceiling, the man it goes to the FD. That's the kind of things most of the banks are doing.
That is the features
Apart
of the
from
product.
that, anything else? Any other
The
innovation?
features of the product alone is it differentiates in 3. How that feature is available. Is it available to me at the drop of hat? As you were telling it, is it available to me at the tip of my single button? Whether I can raise the loan against it by sitting at home. But these are the features of that particular product. That is getting a lot of innovations. And next innovation, what is happening today is the way it is getting delivered today. Today, the biggest way of delivering is that by sitting here, even before the 4 minutes which is going to get closed, you can open an FD in any bank of your choice. That is the biggest feature difference. Exactly a decade before, it would have been a pain. You have to take time off. I'm sure that the guys who are sitting here would have taken time off, even putting a deposit in your name. And it is something, settlement of that, especially when you are not available, whether it is, a lot of innovation is taking place there. The best way for deposit and savings fund today is, can I use my money in my savings fund, which is a product which is going to give me a daily product, and interest is monthly or quarterly or halfly, whatever it is as per the bank. Can I use it at my will for the purpose for which I wanted it? Can I put it in SIP? Can I put it in bulk? Can I put it in FD? Can I transfer the data across the country? Can I do an LRS? All those are the feature innovation.
Prashant, anything on innovations? Not even customer service, a lot of things are happening, but on the liability side, any scope for innovations, or you are experimenting something?
I think in the name of innovation, we don't want to make things complicated. That is one thing. I think on the liability, if the things remain simple, that would be much better. Only one thing which actually we are expecting from regulation side, today there is no differentiation in terms of rate of interest which we offer to our customers, irrespective of the risk profile. I think today if I have to offer a rate of interest I have to offer the same rate of interest to all customers. Depending on the LCR, I think there should be a flexibility in terms of offering the differential rate of interest, which is definitely going to help the large number of population in our country.
No, but when I'm keeping money, the risk is mine. The risk is not yours. You're talking about the frequency of withdrawal. That's what you're doing.
I'm not
Explain to
talking-
them, please, LCR part, because risk is always mine. When you give credit, that is your risk. Deposit is my risk. If you go belly up, so I get only 5 lakh from
I
DICGC.
explain to you. So suppose if I
What
have
is that?
to offer a rate of interest for a 1 CR of deposit, okay, I have to offer the same rate of interest whether you are an individual customer or you are a financial institution. For an individual customer, my outflow on the LCR is just 5%. For a financial institution, my LCR outflow is 100%. So it means there should be a flexibility to the banks to offer the differential rate of interest depending on the customer profile for the same amount.
That's the. Yeah, he's talking about those, I mean, it's little technical. I think we need to take it aside that liquidity coverage
But
ratio.
maybe technical, but I think it is going to benefit all of you.
Okay, sir. Vaida, you wanted to say?
Rakesh, you want to go before me?
Huh.
Innovations.
Yes, sir.
It's
Yes,
already
sir.
said it. Okay.
Because you are one of the banks first, you started paying monthly interest
Yes. So
ahead of
you
others.
see, it's like in cricket.
You have
gives-
already marketed
it-
your bank in the
Exactly.
previous round, so no more marketing, but just tell us
What
what
more?
is that?
I mean, you are giving half volley to hit. तो मैं तो हिट करूंगा ही ना फिर
बोले sir.
तो देखो वो ऐसा है हाउ मेनी ऑफ यू हैव आईडीएफसी बैंक अकाउंट प्लीज हाथ खड़ा करो ओ माय गॉड
good, sir, happy.
देखो हो गया
Quickly, sir.
no listen all these people raise the hand by the way it's very big number I am so thankful everybody getting monthly interest credit बाकी सबको quarterly interest credit मिलता है तो हो गया innovation
No, other banks also, sir. Quite a few others also do.
I was the first bank to start. I was the first bank to start.
Okay.
Number 2, who likes to pay fees? How many of you like to pay fees? My bank charges 0 fees on savings account. 0. IMPS 0, NEFT 0, RTGS 0, cash deposit 0, cash withdrawal 0, ATM withdrawal 0, international ATM 0, everything 0. हो गया second innovation. Number 3, now Tamal आपने दिया मेरे को half volley तो last okay now ये हो गया तो all the people who are not having account also I don't mean this forum all the people listening to the video also please open account with my bank okay now number 3 ये मेरे को चिल्ला ये तो बहुत गाली देगा अभी रुको तो number 3 हो गया innovation आपने पूछा number 3 mobile app इंडिया का बेस्ट मोबाइल ऐप IDFC बैंक का आ गया बॉस तो ट्राई कर लो इट इज गूगल रेटेड 4.9 आउट ऑफ 5 तो इनोवेशन हो गया तमाम
Okay, sir. I made a mistake. So not only you are marketing your bank, you have planted people also there to clap and raise. Thank you, sir. So, okay, it's pretty big. But now the last round is this, sir.
all of you don't have account at my bank for innovation purposes open by the way.
Okay. Now just time is up, but just one line each. Today, if regulator wants you to come out with a line like AMFI created that mutual fund sahi hai, so you can't say bank deposit sahi hai. To sell your bank deposit, something IBA or something picks your brain and says that you come out with a slogan. What will be you? One after. Okay, we'll start with Kumar. One line slogan like bank, like
No,
mutual fund.
I think I would not like to go for a one-line slogan because there was never a doubt on the bank deposit at all.
Okay.
I think we need to come out with slogan where you have a doubt on the asset class. This is one asset class where nobody has any doubt at all.
Okay. So you don't need anything. Okay. So.
वहाँ तो already one slogan is there and that is the best I think. बैंक ऐसा दोस्त जैसा.
Huh, sorry.
बैंक ऐसा दोस्त जैसा.
Bank
so we
ऐसा
already have a
दोस्त
slogan. In fact, our bank
So
is
it
like a
comes
friend. And everybody agrees with that. We also have one of the best mobile banking policy.
I mean, I wish we could have a duel here, but unfortunately there's no ring here, so we can't. Any slogan, like bank deposit, like mutual fund, sahi hai, any kind of slogan.
Banking is the lifeline.
Banking is the lifeline. Veda, last word is yours, and you got a minute to think.
No, Subramania said very beautifully, but I'll just add to it. हमारा बैंक का we have put
No, not your bank, sir. For the banking system, for the banking system, like mutual fund sahi hai, one slogan to entice people to those who are withdrawing money or not too excited to come back to the banks.
Okay, I've not thought it through, but I can say always customer first.
So anyway, give them a big hand. All of them are sport. Okay. Thank you, sir. Thank you. Thank you.
Thanks a lot.
No, unfortunately, we have run out of time.
Tamal,
So next.
I'll add that line, okay? Because trust is everything.
Okay.
That's
Thank
our
you.
line.
Thank you.
All right. And I really feel like asking my audience, sharks, are you ready to invest in them? But jokes apart, thank you so much, all our panel members, for such an amazing panel discussion. Tamal sir, please present them with mementos as a part of our gratitude and appreciation to them. I think big takeaways from the session today is, be it any kind of deposit, money stays in the system. It just shifts its medium from a savings account to a mutual fund or vice versa. Focus on service and technology. Serving what customers seek has a higher chance of converting rather than something generic. There are more than 3,000 types of mutual funds products in India. Helping customers choose the right one will really set you apart from the rest. And customers do prefer having an income through their deposits. And banks and organizations with deep philosophies for customers will actually thrive. So thank you so much for such an eclectic and insightful conversation.